through, by the way? Did you practice?
I went through one of the beginner videos.
Mm-hmm.
I find myself having to go back
Mm-hmm.
to the earlier videos just to
Mm-hmm.
take my time.
Mm-hmm.
But this weekend was so busy. Hey, so busy. But at least I tried. So I was asking for the latest ones
Mm-hmm.
in the hope that I would use much of my yesterday to review.
Okay.
And then we had these long meetings at work. Oh my God, they were so long. I couldn't even look at it, but I'll purpose to do so.
No worries. Just take your time.
Yeah.
There's no pressure. I just wanted to know that because
Mm.
in case of any questions, in case of any hurdles, anything that
Mm.
practice, kitu kikuja na practice, you ask so many questions
Mm.
in between, and then some things don't
Yeah.
really make sense. So yeah, that's why I was
Mm.
asking. But in case of
I
anything,
appreciate.
you just ask me. So
I will. Thank you so much.
okay, so today we're gonna do the final part of the Trinity that I like to call it. It's
Mm.
Fibonacci retracement. Fibonacci retracement is part of market structure. Let me share my screen. And I like it because it makes everything make sense. Like it's a good way for you to like pull two and two together, if I make sense. I'm not so sure. So you're gonna
Mhm.
see support and resistance, how it now makes sense. You're gonna see how market structure makes sense. You're gonna see liquidity also in play, and even candlestick patterns to some extent. So Fibonacci leg is the thing that is gonna summarize, because on its own it's a tool. It's a tool called Fibonacci retracement. We're gonna go to the chart and look at it, and even I'll show you how to go about it. But even before that, I'd like to take you to YouTube. Let me go incognito, because where is incognito? Incognito window. I need to show you
Incognito helps with. I'm curious.
incognito. For example, I want to go to YouTube right now. You won't
Mhm.
see details, because you see, if I go to YouTube, you may see my details. So if I don't want to
Oh
go,
yeah.
you may see like my details, my logins, not purposely like you're gonna see the logins, but you're gonna see my
Mm.
email. If I don't want you to see my email, I can choose incognito.
Okay.
Yeah. So if
Okay.
you want like to hide some stuff, you can go incognito, especially like now I'm sharing on the internet. So let me go to my channel. I wanted to show you some video. I did two videos, in-depth videos on Fibonacci retracement. So I will refer you to these two videos later in your free time. I think I need to create an updated version. Maybe I will before the year ends, but these are, you can go and watch them, because I won't
Are you
point out.
sharing?
I'm not.
Sorry, are you sharing your screen?
Let me see. No, not really. Let me see if I can share.
Okay.
I can share. But can you see anything like the Google? Okay, let me share the
Yeah,
Google.
yeah. Yeah, yeah. I'm seeing the Google page.
Okay, right now, can you see my?
Yeah. Now
Okay,
I can see.
so these two Fibonacci retracement videos, you can go check them out later, because they have so much information, and Fibonacci is so broad, so we can't be able to cover everything in one video. It may take like two classes and maybe one practice class. So instead of all that, I will leave these 2 videos for you. They have majority of the things that are important. You can go check them and then we supplement with the notes that I have today, okay? Hello?
Okay, okay, that's okay. Yeah.
Okay, so let me share now this other screen. So I wanted us to start with the notes and then we go to the live charts because there's so much to go through in the live chart. Alafu, I just wanted to note to you, I updated something in the notes, in the market structure notes. Let me see if I can show you just quickly. I updated a framework. I thought it was important to add this framework. Let me show you. This one, multi-timeframe trading strategy overview. You can go for the previous class. So you can go and check there. I was telling you 4 hour for market structure, 1 hour, and then 5 minute entry. And then I was telling you for now, just use two charts to simplify your work. But while I was editing the video, I noticed that it may be a bit misleading for you because the 4 hour chart offers very, very good trends. So I wanted to incorporate that because it may be helpful. Even if it's hard, it's good for you to understand so that you know it is better for you to use the 4 hour time frame for trend analysis. Sasa. And then
What?
you go down to the 1 hour and then 5 minutes if you choose that strategy. So, and then I added some few aspects that I had missed from the previous class. So I think they are better if you understand them. So you can go and read more on this aspect. I will make all these videos, by the way. I may make speed run videos. Speed run meaning the summarized video for them. There'll be just me speaking quickly like a normal YouTube video. So I may create videos for them because while editing, I noticed some things I've not mentioned that are very, very important, of which it's normal because hey, trading is so broad, it's so much to cover. So not that I'm lying to you. So already know in 2 hours you're covering so much already. So you can imagine if you
Yeah,
add.
we're covering a lot.
Yeah. So I will create, I noticed that while editing in most videos, there's some things that I miss. So I will end up creating separate videos for them. Alafu for the international market, especially for those who don't listen to English, because I noticed some people are like, oh, you're speaking in Kiswahili. So some people are struggling. There's a Mzungu fan of ours of mine of our channel that was having a hard time, but they were still um they were still listening to the videos in spite of us speaking in Kiswahili. So he was like, okay, good video, but why don't you speak in English? So I'll just create a whole new video for them because it will be unfair for the international market. Okay, so I think we need to begin.
No worries. Mhm.
Let's start. Do you know anything about Fibonacci retracement? First of all.
I'll be honest with you. I see people picking the tool and placing it on the map.
Mm-hmm.
Okay, by people, I mean like the 1, 2 rare times I've interacted with it,
Mm-hmm.
but have not built enough confidence to use it.
Okay.
Yeah.
So I just want to let you know that it is one of my favorite tools. I love it so much. And yeah, so I won't force you to use it because already what you have is enough. But I find it to be something very, very interesting. Like it's so weirdly interesting because it's nature, like it was built into us as humans. You're gonna see it, but it's so weird that things yani zinaenda to mathematical, like prediction, like it's something like you can almost predict because it goes, and it didn't start like yesterday. You'll see it in almost everything in nature, our bodies, DNA, trees, land, rivers, you see. So I find it interesting, yani inakuja to play even in the market. So it's so interesting. It's also
Mm.
interesting. So
Okay.
Fibonacci retracement, we're gonna cover the retracement aspects because we need to find support and resistance, just to tie to what we've discussed in the previous two classes. And we are not gonna focus on the expansion. There is Fibonacci retracement and then the Fibonacci expansion. The expansion bit normally gives us the profit targets, and then the extension bit, the retracement bit normally give us the pullback, the correction, the retracement. So there's some questions I normally get personally when it comes to Fibonacci retracement. So do Fibonacci levels really act as support and resistance? Yes. Through collective trader psychology, when thousands of traders watch the same levels, especially the 38.2%, the 50%, 61.8%, they create buying and selling pressure. Remember, supply and demand. Buying and selling pressure is what we call supply and demand, making them actual support and resistance levels. It is a self-fulfilling prophecy. Remember what I told you about self-fulfilling prophecy? It's normally something like you you think about a lot, it makes it true. So many people think about something, it makes it true. If we remove the self-fulfilling prophecy, in aspect of, if we tie the self-fulfilling prophecy in our normal maybe biology or anything, you see somebody who thinks that they are sick in the negative aspects, normally it ends up being true, even if they were not sick. Cinda, you should scare that meaning, that
Yeah.
aspect. Yeah. So same case, if you think that
Mm.
you are healed, chances are you're gonna to, in the positive aspect, you're gonna be healed. Same case, like I want to go maybe to relocate maybe to a country like Monaco. You see, so that's, if I believe that and hold that thing true to me, it's some sort of inaitangwaje kitu ya new age, of which I don't like new age, but it's something to do with that, the psychological aspects. For example, if I want to, I want and I believe, and I dream, actually, let's call it what it is. I dream of going to Monaco, and although it's a rich country, so I want to live there, and maybe I want to relocate there, my kids to study in like good schools, blah blah blah. I have to believe and think of that, making that a self-fulfilling prophecy. So chances are, if I believe so much in that, it will happen. No, no. So same case
Mhm.
now, maybe I want to get straight A's in my masters and get the highest score. If I believe in that and work hard towards achieving that goal, it will happen. So that's what we call self-fulfilling prophecy. People believe in a level to the extent that that level becomes true support and true resistance. I hope I've clarified on self-fulfilling prophecy, because you're gonna see it a lot in this lesson. So the other thing is, which Fibonacci, oh, I need to note before I proceed, the 50% level is not a Fibonacci level. This is a psychological level. The levels of Fibonacci here are 38.2 and 61.8. 50% was added because a lot of people, remember what I told you about psychological levels. Many people, like it's human nature, we like to round off to the nearest whole number. So same case it applies here. So 50% was added in that aspect. So which Fibonacci levels are strongest as support and resistance? 61.8%, which is normally called the golden ratio, it is the strongest, then followed by 50%. And then me personally, I love the 38.2%. And then the golden pocket is normally the 60. The golden pocket, you're gonna see it 61.8% and 65%, which is the most reliable. It's golden, and it's golden in almost everything, including paintings, rivers, blah blah blah. Almost everything in this world has some Fibonacci aspect to it. Then we have the 23.6% is weakest, and it doesn't mean it's not a tangible ratio. It just goes to show that uh, it is not commonly seen. So it doesn't offer us high probability setups. And then the 78.6%, if price retraces at the 78.6%, it suggests that the trend is almost over. It's already over. So there's no need to trade at that level. How do I know if a Fibonacci level will fall? Look for confluence, that is normal price action, normal support and resistance. So historical reactions, volume increase, candlestick patterns, alignment with other support and resistance levels, trend lines, market moving averages, multiple time frame agreements, and there can be more, and then like VWAP. So all this offers us more confluence. That is, we get a stronger, it shows that that is a stronger support and resistance level. Then we have, should I trade immediately at support, at Fibonacci touches? No, you always wait. Even with other strategies, you always wait for confirmation. That is candlestick patterns, volume, price rejection, other technical signals that are going to align, etc. So how to draw correctly for support and resistance. So let me just mention, and then we go to the chart. For an uptrend, you start from left. Everything you normally start from left, because we normally say remember. So we're gonna use the previous data to give us the future, to at least have a future prediction. So up for an uptrend, we're gonna use swing low to swing high, and then for a downtrend, we're gonna use the from high low to, so swing high to swing low. Use obvious swing points, recent significant moves, and then treat them as zones, not exact lines. We're gonna say that again. Do broken Fibonacci levels reverse rolls? Yes, just like we did support and resistance flip, same case with Fibonacci. So we're gonna see Fibonacci and support and resistance, they're gonna marry at that level. They're gonna become almost one thing. Yes, broken support becomes resistance, broken support resistance becomes support, retests offer excellent trading opportunities, basically because the market structure has changed. Now, I need to go through, before we go to the chart, let me cover this. The Fibonacci support and resistance. Why Fibonacci levels become support and resistance. One, the way ahead explains self-fulfilling prophecy. Millions of traders watch the same levels globally. There is mass buying and selling, thus creating actual support and resistance at these levels. And then institutions and algorithms use these levels as well. And then historical market validation over decades. And then we have each level support and resistance trend. We said that 23.6% weak support and resistance. It offers shallow retracement in strong trends. 38.2 moderate support and resistance. This is healthy. This is good. Remember, it is one of my main, the 38.2 and the 61.8%. It offers healthy pullback level. And then the 50% strong psychological support and resistance, which is an institutional favorite. And then 61.8%, we have the strongest support and resistance, golden ratio, and then it make or break. It offers the strongest support and resistance. It's also called the golden ratio, and it may make or break the level. So once broken, we have a flip. If it's not it, if it holds strong, it is a good level. So trend 78.6%, it tells us the trend has weakened. So it is a trend weakness signal and often fails to go to maybe the next swing high and a swing low that we are targeting. So drawing Fibonacci correctly, again, time inakimbia jula. We are
I only
almost
have 9 minutes. Wow.
wa hai hata tujaanza. Okay, tutaenda kwa chat in the next class. Let's just finish here the first section. So the step one, you identify trend and major moves. Step two, select obvious swing points, that is recent, and they must be significant. The best one is the 4-hour time frame, and you're gonna see why. And then draw direction. You need to follow trend, low, high for uptrend, and and high, low for downtrend. So the way we are doing high, low, low, high, low, 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 high, low, low. That's why I was telling you, Fibonacci now works very well with market structure. Analyze support and resistance potential with Confluence. Now, once you've identified the fib levels, mark now. Get the Confluence, and when I say Confluence, what I mean is it makes that level very, very strong and very important. So making it a key level, an important level to look for. Common mistakes, wrong direction drawing. I'm going to show you using unclear swing points, and then overdrawing multiple Fibonacci levels, and then ignoring market structure. So importance is, the main important part is, you're just helping. Fibonacci is supposed to help you identify levels for market structure. Now, multiple time frame Fibonacci support and I think in the previous class we did some Fibonacci, and we saw all those retracement levels were in Fibonacci levels. No, I think I
Yeah,
showed you.
briefly.
Yeah.
Mhm.
Okay, good. So we're gonna see it again today. And then multiple time frame Fibonacci support and resistance. Time frame hierarchy. Weekly is the strongest support and resistance, and I think institutional levels are using this level this time frame very strongly. And then the daily strong support and resistance level um, used for swing trading. For our moderate support and resistance used for day trading, and then 1 hour weaker, but it is used to by scalpers. So since me personally, I'm gonna be using for today trading, I prefer the 4-hour time frame to map out the Fibonacci levels, and I'm gonna use the 4-hour time frame to map up the market structure analysis. That's why we are not going to use you remember in the beginning of this class, I was telling you I added those notes because I noticed that it may not be good for you to start with maybe the 1 hour. I added the 4 hour because it's stronger. So you remember that? So
Yeah.
the reason now is here. It's clear because the 4 hour time frame is most suitable for mapping structure for day traders, and then the 1 hour for scalpers. Now, strategy layer. You just need to layer time frames for Confluence, and then for Confluence areas where multiple Fibonacci levels align. So you just layer the way I showed you in support and resistance. You layer, and then you go to your entry time frame, which is maybe 5 minutes or 15 minutes. That's where you enter your trades. So same case, just layering. Higher. So before we go to the next part, which will be Fibonacci Confluence, let's go to the market now. Let's go to the market. I don't know if you have any question.
Yeah, as you were talking about the aspect of psychology, I was wondering whether you are referring to this law called Murphy's Law.
No.
Okay, so
Elaborate Murphy's law first of all, because I don't know that law. Let
mhm.
me be
So
honest.
the originator of Murphy's Law is that okay, so say you have a slice of bread and then you've battered it on one side.
Mm-hmm.
So it's like the battered side is the one that always falls on the floor. So they go ahead to say that it's like we are expecting it to that occurrence to happen. So
Mm-hmm.
it's like our thoughts and fears can influence our actions, leading to what you're saying, self-fulfilling prophecies.
Prophecy. Okay, okay. Maybe I'll need to research more on that.
Mm,
Murphy's Law, is it Murphy?
yes. And then S, law.
Okay, let me see. Or anything that can go wrong with will go wrong.
Oh, okay, okay.
Uh,
Mm-hmm.
yeah, it's similar. So it is used to describe and humorously explain unfortunate or unexpected events, particularly when things seem to be failing and having problems. While the law is often seen as negative, it can also be viewed optimistically as a tool for anticipating risk, okay, preparing for challenges and developing backup plans. I think it is used in business where you have to anticipate risk. Kwani umefanya masters?
Maybe.
Even
But it has nothing
it is
to
a
do
master,
with it.
it is a master's thing. Anyway, so I know, so you mean like when preparing maybe trading, sorry, your business plan, you have to add the Murphy's law whereby you need to account for the risk aspect. You need to expect for things to go wrong. Is that what you mean?
That one was more of a mix of a bit of humor and technical. Like if you
Oh,
are anticipate if the majority or rather if the is prevailing feeling is that something is gonna go wrong or something's gonna go right or this is where we are supposed to be or this is what is working, that's what's gonna happen. But I like that last line where they've said we can use it optimistically
yeah.
so that you prepare for anyway, we'll keep reading about it.
It is
Yeah.
interesting. When I'm
Yeah.
not yet, I'm hoping to do my master's next year. So when I was
Oh,
choosing which
nice.
masters to pursue, I was
Mhm.
like, I was like, okay, because me I did an economics major in school,
Mhm.
economics and finance. I was like, I can't,
Oh, econ finance. Oh, okay.
I can't do MBA. There's no reason for me to do MBA. I can't do economics related. So when I was going to look
Mhm.
like, because I see people, I watch videos on MBAs, so I normally see these two theories vitu vitu, ndio maana nilikuwa like umefanya masters, inakaa vitu za masters because I like looking at videos just to gauge. Okay, then before I applied, I was looking at these videos to try and see which masters to focus on, nione at least zinahusu nini ndo nizichuje hivyo hivyo. So it's interesting.
That's nice. I'm wishing you the best in your choice of masters, and I'm happy you shared it. In this class, someone would have thought whatever you're doing with it, Forex is like going back to school already.
Yeah. Oh, okay. It's actually in a dream school of mine that I wanted to go. I live in campus, but the only
Mhm.
hurdle will be the exam. I think most masters, because I'm going to do a technical one in mathematics and
Mhm.
and programming. It will be a programming in mathematics thing.
Mhm.
So in the finance industry, of course. So
Wow. Mhm.
so it will be technical. So there's an exam. The only thing that will fail me will be the exam. There's an exam before you join, and if you
Okay. Which institute is this?
let me not mention.
Okay, okay, okay. But not local.
Not local, not local. Uh,
Okay, okay, okay. Wow, wow, wow.
there's an
You're
exam.
very inspiring.
Yeah, I have to
Mhm.
challenge myself. I was like, okay, I'm bored. I need to advance because I didn't prefer going back to do my masters after graduation because I didn't know what to do, and already I didn't. Like I was
Correct.
confused. So I was like, okay, when the time comes, I will know. So yeah. So when
That's
preparing.
that.
Mhm.
But by the way, my roommate in campus, KU, was pursuing econ finance.
Wow, nice, nice.
She's one of my very good friends.
That's interesting. Okay. Let's wait because it's one more less than 1 minute, and then we go to the next class.
Go to the next class. Yeah.
Okay, so first of all, I need to remove these details. Okay, want to remove this? Yeah, okay. So let me remove that. I need to look at a chart that you've not yet. I want to look for a chart that I've already drawn levels so that I just bring them back on. So like this one, I want to hide it. Let me use gold. Let me hide. Let me hide. I want us to use this so that when we come back, we just bring them back on.
Okay.
Hide. Okay. So for example, first of all, when we are using Fibonacci retracement, the first thing you need to do is go to this one, this third button, this one that has lines. And so when you click it, it's called the Gun and Fibonacci tools. So we have all these things. We have the Fibonacci side, the gun side. This is so much information. I don't know majority of these other things. All I do is maybe the fib retracement, maybe this, but not so much. And the rest now, there's no need to know much. Maybe in the gun, you can go and learn more about it. So there are traders who use all maybe some of these other tools. So for us, we're gonna just use Fibonacci. It's enough for us because we want them to give us the support and resistance levels. So you start it and then it comes up here. Now the tool is right there. I need to, I can just use, okay. When drawing a Fibonacci retracement level, like we saw in the notes, you start from left to right. So in this instance, this is left to right. This is, we're gonna find the support level. And if you're going to from left to right again, if we're gonna look for resistance, we're gonna resistance. So the first one is shown support. If you are gonna use resistance, let me go to a chart that has not yet been used, because right now we are in an uptrend. We're gonna look at from left to right. This can be a very good fib level. So you just come again from left, swing high to swing low, like that, and then this gives us the support, the resistance. In this case, this was our resistance. So if I give another one that is better or clearer, we can use maybe here. So we come and take our Fibonacci tool. This is a swing high, swing low, and you see this one acted as a resistance. So just know we start, the first rule is left to right. The second rule, we start from left to right. And yeah, in this case, left to right. And then for a downtrend, we are looking for resistance, which is this. For an uptrend, we are looking for support. This one acted as a very good support. They are selling you the golden zone, the golden ratio is 68%, and then the golden pocket. Now this mustard color is gonna be the golden pocket. Now, even before you continue, I've just mentioned those two roles. Let me mention now the details of this Fibonacci level. We can use the most recent right now. You have swing low to swing high, left to right. We're looking for support. You see this actually is a very good support, and this one also, the 3H2 became also a good support. Now we need to learn more about this tool. You just highlight on the tool and then you come to the settings. Once you come to the settings, we're gonna start with style, the first part. I want you, in the video, you're gonna see more details on how to customize it, but now these are the levels that I like to use. We mentioned the 0.236, we mentioned the 3H2, we mentioned the psychological level 0.5, we mentioned 61866, this is added, and then the 0.786. You're gonna find the default is different, so you remove all those numbers. For example, you're gonna see this one, you just remove them and retain this one. So you can screenshot maybe in the video, you go to the tutorial, I will send you the screenshot as well. Let me see. Okay, I will send you the screenshot also. You just customize it like that, the levels. Then the trend line, it should be a trend line, and then the levels, no need to extend. You can extend lines to the left or to the right, but no need for that. Just click, don't extend. The colors, now colors are important because you need to differentiate those levels, so you can choose. For me, the mustard, I like to use it the golden pocket, at the golden zone 0.618 na 0.66. I like it to be mustard color, and I need to say that this pocket, this 0.66 was added by my mentor. He's called Daniel, from Church Champions. So I just go by what he added, and I like it because it shows, instead of giving me just one level, he added it to be a zone. So we normally call it the CC. So whenever you see that zone, just know it's called the CC. I normally like to credit it to him because that's where I learned it from him, and it's a very good level to add. And also, there's one more thing I need to show you. You can have it be in in all these time frames. I need you to see the. I need you to see there's a place to either put it as yes, here, down here. You can have it in values, you can have it in percentages. So you see, like for example, in this instance, when I say 0.0236 is just the same as 23.60%, 38.20%, 50%, 61.8%, 66 percent, and 78.60%. In percentage form, you can have it in percentage form, like in the notes, you can have it in the value form. So personally, I like the value formation. And then these others, you can just customize it on your own. I don't know if you have any question up to there, because I want to show you now how to use the Fibonacci levels.
I'm wondering, for the 0.66, was there, for creating that zone, was there a need to also add another one in the lower values?
No. The reason why I think, to my opinion, he gave it that range. First of all, if I remember correctly, he trades crypto. So he noticed that he normally was trading mostly the Fibonacci, the golden zone. sorry, the golden ratio, the 61. Let me put it in ratio form so that it makes sense for you, and then I'll revert it back after this class. So the 60, he normally used the 61.8%. Normally, this level is very good. So you'll see price come and then it rejects. But he noticed that most chances were price didn't respect this one, or it will respect this one, but come back to grab this liquidity right here. Remember the topic on liquidity. So this one was mostly the liquidity place. Like people would enter here because remember this is a very strong zone. So people would come and enter here, and then the liquidity will be grabbed at this level. Now you see it's better for you to come and enter your trade here instead of here. So that's why he
Yeah.
added this level. So that was the importance of that. And then in the video that I created a year ago, I explained it because I noticed in my theory, like while I was studying, I noticed that um, the ratios, when I was calculating the ratio one by one, most ratios were like 66%, some 61.8%, some 65%, but they were ranging between those two. So I decided to stick with it. I had the choice of not going ahead and using it, but I noticed it made sense. So when you are actively trading those levels, for example, here, you see the 0 point, it came and rejected here. So if you had entered here, between here and here, it is better for you to enter here. So that's why
Yeah.
he added that and made it his thing. It's one thing that makes it unique for him. Like we can credit him. There's nothing important. Ni tu kitu ya, okay, si kitu ya wanapa because it's an important aspect of using Fibonacci, but it's like, okay, he's an inventor of something, you get. So yeah, it's
Mhm.
like our modern Elliot wave. There's a guy called Elliot alitengeneza Elliot wave. So yeye ni kama alitengeneza hiyo inaitwanga Champions Channel, CC Champions Channel of the Fibonacci. So yeah, so same case. So it's better to enter at the 0.66 than to enter in the 0.618 because it gives you like some breathing room. And you see, kama angeingililia hapa, tuseme because this one would he would have entered maybe after this rejection, tuseme kama hii candle. Hiyo candle will close and then he enters here. Aeke a limit order there, and then his stop loss should be here, and then his take profit should be here. So that is a good risk reward. But you see how stressful this is because it was ilikuwa almost kukua hit, sindio? So what he would
Mhm.
have done, angekuja apandishe tu kidogo tu, akuje aeke nini yake hapo, entry yake ikue hapo, kama ni limit order kuja eke entry yake hapo, and then I extend tu kidogo just above for his take profit, and he has actually a better risk reward and
Yeah.
he's safe. So that's the main reason why. Any other question?
Oh, okay. Yeah, I think it responds to what you've said earlier in the notes that
Mhm.
it is a favorite for institutions, this particular tool.
Yeah.
Yeah, so and we have to keep in mind we have
Mhm.
liquidity hunters.
Yeah.
So yeah, okay.
Yeah. So it's a very good tool, yeah. But it offers so many opportunities. So if I take like this recent level, this is market is in an uptrend, right? So this I think happened on Friday. I like this move. This move, hey, it was an hey, who are happy those who traded on Friday. My EA did well. That's why I'm saying that I didn't trade personally, but my EA that was trading this did well. So
Wow.
and you can see the support and resistance, how it happened. So even before that, we have this curve. you have this Fibonacci level, like, and you're gonna see it work so many times. It's like, okay, notice you cannot
Nimepotea.
see. Nimepotea. What about now?
Unasema even before that.
Even before, even before we look them closely, ukienda like maybe backtest ama kuenda kuzifind kwa when I give you your homework, you're gonna see it works like a lot. Like it, you keep seeing them reversing at those levels. For example, tutoe hii tuweke hii the previous you see it is retracing in at a fib level. Let's extend kidogo. Let's extend again. So you see swing high, sorry, I'm looking for support, swing low, swing high, left to right. I'm looking for support. Support, first of all, we were offered here. We thought if we were in this point in time, we thought this was a good idea. If we go to the lower time frame, you had like 2-3 trades up. There was this level and there was this level. So you see the opportunities you get, and then finally price came down again, and then of course tunge lose some, maybe some trades there, and then price came back and and went all the way up past this swing high, because our goal when you are trading Fibonacci retracements is we want price to come to this level, to this swing high. So it attempted first time here and then came back and then came to this level, and then shoop, it went up and it offered us support at this level higher. Once you remember that aspect of support and resistance flip, it happened here, right here where I'm pointing. And then let me just draw it for you so that it makes sense there. So it happened, let me turn it. So this is it was a resistance level, but it flipped to support. And if you can see, the way I was telling you, now this one stops being resistance, it's become support. If you take your fib again and come and take your Fibonacci retracement and place, oh, sorry, I'm taking the profit tools, sorry, and take your Fibonacci tool. You can take it from left to right, and you see there's confluence at the 0 point. Almost okay, the rejection of the zero, that 8.20% hapa, and unaona iliguza. So this is a very strong confluence, and again that's what I was telling you, it's good also to have zones. So if we had like a zone right here, because this is the one that gave us the swing, sorry, the swing high, if we extend it. Okay, I'm having trouble.
It was also tested.
Yes, it was tested as well. So you see, it is a very good, and it came to that zone. So if we go to the lower time frame, if you are preparing to see, because this you see, it's a very good confluence. You have this SR, and then trading ingekuwa sasa, kabla hii candle ikuje, price ingekuwa wapi? Ingekuwa somewhere there, ikuje all the way. If you go to the lower time frame, of which let me mention it right now, people normally trade Fibonacci on their own. They don't go sijui lower time frame nini. They trade it on its own. So you have that option. You don't have to weka kazi yako tu ni kwenda kuangalia level, but it's good if it aligns with something else, like maybe support and resistance, and you can trade it in one time frame. So you come and enter right there. You see, somebody would have made so much money because they waited for it to come and touch this support level, and they would have had a very, very big risk reward, because angeka stop loss yake chini ya hiyo zone, ama ange nini kidogo kwa hiyo level, kwa hiyo swing low previous, and then they have a very good risk reward of 1:33. So you see, like, the advantage is you can combine all these things, but sasa tumeanza kuchafua chart, inaweza kuwa overwhelming to you, but I just wanted you to see how.
No, it's okay.
Yeah, I wanted you to see how
So,
it.
so for someone who probably maybe missed that shoot that
Yes.
happened,
Yeah.
that breakout, and
Yeah.
you're not sure whether it's a fake out or whatever, you wait
Yes.
to be quick tested pale.
Yes. So it's a break, and then we are retesting this break. But in the mass market structure form, we are in a higher high, higher low, higher high. So it's a retracement, higher high, and then it offers higher low, and then it's created high. The same candle came and created a higher high. So you see, we are still in an uptrend. So for example, now if we are talking right now where we are in form of price, right here. So it formed a impulse, correction, impulse. So we're gonna look for Fibonacci retracement now. This is what I'm gonna do. I'm gonna take, it's one candle less, but it's still important because it's the one that is gonna give me my support level. So I come here and then I wait for a bullish candle. Once I see a bullish candle has formed, because you see we have different levels. You have, this one has already been tested. This one has already been tested. So we are waiting for maybe this one to be tested. If a bullish candle closes here, very fast, 5-minute time frame, you wait. You wait for an entry. Now, the other
Question.
option is the other option is once price comes and the next candle forms, instead of going to the lower time frame, because Fibonacci can use it on its own. It can be actually encourage people not to confuse themselves, just use it on its own. You can choose to go with the 1-hour time frame, the 4-hour time frame. Sana swing traders, or you can use it in the 4-hour time frame, and then the 15 minutes. If anything, if in case you really want to use it in the low time frame, 15 minutes, but the 4-hour time frame for swing traders is always good. Okay, ask the question, sorry.
So if you scroll down a bit so I can see the previous.
Okay.
Hello. So I have a question. You see where we have the now it looks green. Of course, in the other
Oh,
time frame is
oh,
that zone.
uh-huh.
So we've called this one an impulse. This this one with the highest liquidity.
Mm,
I want to find out from you, why
mm,
can't we label
mm-hmm.
the previous high kule
Up
as an impulse? No, on the unaona date 20. Your kind of the green, the bullish one.
this one.
That move, is
Mm,
it not also I'm looking at it as the first impulse, and then this second one year after 22nd
mm.
as a confirmation?
Yeah, so you're right. You're right. Because the thing is, it needs to break this. For it to be called an impulse, remember what I told you last time? It has to break this the previous high. In this aspect, we're not talking in market structure aspect. We're just talking in matters, matters
Support resistance.
highs and lows. So you see this high, this ama swing high, ama this was a lower high. In this instance, it was a lower high, because lower low, lower high, lower low. Actually, lower low, lower low, lower high. This didn't end up breaking. So this one is
No,
in
no.
this sorry, nisiko confused in label vitu mingi yake. Let me just extend it. Okay, you see right here we have broken this structure right here down here, but in the grand scheme of things, this is the lower high that needed to be broken. Hii yenye iko hapa juu, naiona because unaona ilikuja ikabrekiwa hapo hivyo. So hii inaitangwa internal structure, inaitwa external structure. So kuna structure hii main, hii ya lower high, lower lows, and then kuna hii ya ndani, because you see this candle didn't come down here, it didn't break this one, this low hapa. Umeona? Unaona hilo nimepoint? hapa haijai break, ilikuja ikabrekiwa na hii. So hii ndo ilikuwa lower low and then the next lower low ni hii. So alafu after a lower low unakumbuka tuna creating a lower high. So lower high yenye ilicreatiwa ni hii. But unaona hii venye ilikuja ili attempt ku break hii lower low but haikumake. So hii si lower low. Haya, hii nayo si lower high, but in this aspect it is tukiangalia it's an internal structure. So we don't focus on internal structures for us to not to confuse ourselves, but you can use them if we are using just support and resistance. So for kama nilikuwa tunaenda kusema support resistance, of course ni resistance na imekuwa broken na hii candle, hata kama ilikuja ka reject kidogo ime break because inaweza kosa kunipea a sell hapa, because you see if I was using my zone ingekuja tu nichukue hii ndio ime create your swing high, ningekuja niweke zone, you see still singekuwa nimepewa sell position na hiyo resistance until somewhere maybe after hii candle limekuja ndo ningepewa. So you see it is not right, it's a weak level for me. So you see this level is stronger. So this is stronger. It's way better than using this. Yes, in essence it is, but it is internal. It's an internal structure, a structure within a structure. Because the reason why we don't qualify it is because it hasn't broken this low right here.
The previous low. Okay.
Yeah. So any other question?
No, I'm glad I asked that one.
Okay. In case it will be
okay. So now that explains when this huge bullish candle came here and it broke kabisa ikaenda mpaka huko juu, you still wait?
Yes. You wait for it to come back to this swing high, ama juu tumeanza sasa ku create ini lower low lower high because ime break yes hapo, but ili break vizuri this one. So I would have price ingekuja hapa ningengojea maybe let's just in the 5-minute time frame how it behaved. Chances are there's a very bullish candle happening in real time. So because again, but that is anticipation. I don't like anticipating price. I like trading price. You see how it went. So mi singekuwa na chance ya singekuwa na according to my strategy, singekuwa na strategy ya kubuy in this time frame. Then have ningoje all the way huku kwenye sasa tulienda kuona hiyo trade imerudi. Tungetrade huku.
So that is also a form of risk management.
Yes, it helps you to and it helps you to manage your psychology. Juu hautakuwa unaingia tu juu, hautakuwa na hiyo form of fear of missing out. Yes, so it helps you to control yourself. Ngoja tu price irudi hapo, itakupea tu opportunity. Just be patient, not need to rush. And then the advanced aspect is you're gonna see like all these opportunities. You see, there's somebody who came and traded here. You see, venye nilikuwa nakwambia you can choose like yes, umetengeneza fib yako hapo, so unangoja kuona rejections at those levels. For example, if we just analyze this range because it has formed a range, you see, equal highs, equal lows. You may notice. So hatuja break out yet. So you see, there are so many opportunities that we had been offered to trade, which is good in the lower time frame, that is. So once you are ready now to combine market structure ya juu na ya chini, you can do like the way I taught you how to trade support and resistance. So in this case, tumepewa time inaenda kusha tena. Tulipewa support, tulipewa support and resistance. Okay, let me just go back. Tulipewa support and resistance levels zetu hapo na Fibonacci, si ndio? So this market structure, kuna mtu atangoja ama kuna mwingine hatangoja. So in my case, Mr. Ngoja, ikuje all the way hivi. What I'll do, I'll go to the 5-minute time frame if I have the time, that is, and then I wait for price to come to my levels. So for example, this was the first time it came right here. Am I here? So I have to wait for liquidity to be grabbed. Whenever I'm entering a long position, I prefer liquidity to be grabbed first to just give me confidence, nothing else. So ningekuja, the first instance will be this. According to what I taught you now, it would have been that. And then my target would be, of course, ingekuwa all the way. So you just come, you can choose to go all the way as well if you want, according to you. So for me, because I know Fibonacci normally gives me a good risk reward. Uzuri yake pia inakuwa risk reward yake iko tu sawa. So you see, I've come, I don't want to make it so small. Let me, maybe 30. Let me make it 30. Because this is not also a good idea. Now you see price came back, it came back to draw down and then ikapanda. Because mimi always, hata kama price imekuja to my level, I normally wait for a bullish candle, the opposite candle to finish forming. In this case, this would have been a good idea, but this candle is very big. So, but I would have still entered, so it would have been a loss. But this candle would have offered me like 40 pips, which is not a good idea. Hata kama risk reward yake ingekuwa sawa, haingekuwa a good idea because I would have targeted maybe huku juu. Still not a good idea because I would be taken out. The other instance is I will do it, okay, nimepewa one good trade, hii ilikuja almost halfway. This was a 1:2. This would have been a good trade, the first one that I had given. This one not because of that bullish candle. It's very, I normally look at the size of the bullish candle ama the bearish candle in question. Price would have come back again and then it has to break. For me to enter, it has to break that. I can't enter here because I need to see price breaking right here ama coming to this level again. Nishafanya kazi yangu ya support and resistance. Sijui kana confused by the way. Now this one would have been a good, this one will have been a good entry. I'll still target that level. Ama this highs over here because I see so much liquidity over here. And then my stop loss would have come down there. So yeah, this one was successful at least. And then I wouldn't enter here, I wouldn't enter here. And then you have this new level. Or maybe somebody else would have entered. It depends. So mimi mimi nimejichagulia hivyo. So seti kuna good reason. Mimi tu niliona mimi sitaki kuchoka akili. Let me remove some things. Haya, and I have several trades. I have 1, 2, one was a loser yenye tumetoa 3. You see, one Fibonacci, we're still trading Fibonacci because you remember Fibonacci gives us support and resistance level. Tulipewa na 4-hour time frame, but so far tumesha already trade zetu 3. So you come back and now wait. So somebody else will have entered a retest here. Kuna mtu ange trade hapa, kuna mtu ange trade hapa, kuna mwingine ange trade hapa. They're still not wrong. Hii ikawa itamaliza bullish, kuna mtu ata trade tena hapa. So you have so many opportunities until price now comes. So there's somebody who may trade in that aspect. And another one now may stick to one level. I hope it has made sense.
I'm liking the fact that I'm learning how to come up with so many confirmations before I enter a trade. Okay. Or rather, I am affirming the fact that one needs a lot of confirmations because that way you have confidence when you're getting into a trade.
Yes, the most important thing is confidence. People underrate confidence, but it carries so much in your psychology. It helps you enter trades without hesitation, utakuwa unaogopa. And then it makes sense, like utakuwa like na FOMO hii, unaingia tu trade tu anyhow. Hata kama umeingia na basis ya technical analysis, you're still entering without knowing what you are doing. So what helps with all these things, especially support and resistance, it helps you to trade with purpose. You know you're going to do a certain thing, and once price comes to those levels, does it do? You see? Yeah. So
Okay.
any
All
other
right.
question? Any other question?
I know for our charts, we have been more biased towards uptrends. Is it that your favorite approach to illustration is to show opportunities in the uptrend? Ama next time tutaangalia downtrends.
Let's look at a downtrend side. So it's
Okay.
good you've mentioned. I've just gone to the BTC because I know BTC right now is going down. So
They're
let's
saying it's gonna get to 400K or a million. My God, this FOMO is too much.
don't have FOMO. You'll know, but it's good to invest because it helps.
Like
For
someone,
example, mhm,
I had someone say somewhere that for BTC at this level, kwanza, if you maybe don't have much of capital, actually learning a skill like this one, you
mhm,
can be trading opportunities in the market and not and actually benefit.
yeah.
Mm.
So for example, yeah, it's very true, and I like crypto because crypto is so good. By the way, it offers its own opportunities. So it's good to learn the skill because you can apply it very well there. And it offers
You
very.
will be surprised how,
Mhm,
Says you'll be surprised how so many people
mhm,
don't understand or don't realize that you can actually apply these fundamental principles in trading pairs.
yeah, I learned
People,
my first mentor ever was that CC that akina Daniel and akina Igor, chat champions. So they were trading with. I started trading with crypto, then I came back to
oh,
Nini.
FX.
Yeah,
Yeah.
I started with crypto me myself. Crypto
Wow.
is good, yeah. It's actually I like it.
Okay.
Nikiboy Kanga, I just
Yeah.
go there, place a trade, and
Um, um,
surprisingly, most trades are winners. Hmm?
Ama you, Ama you came back because it was not a bull period, a bull
No,
season.
no. Nini haipendangi kelele. Crypto haitakangi kelele. So
Uh,
you can't trade it because you see, sometimes it doesn't have volume. Ama the
uh,
volatility you may want, and then so it's always wise to use the higher time frame when trading it. So it's good for swing trading. I prefer it for swing trading, but it's not all crypto.
oh,
It's
okay.
just Ethereum, Bitcoin, and maybe XRP. But
Mhm.
nowadays I don't even have the time to look at Akina XRP because Bitcoin and Ethereum is enough. Akina Solana is all. So yeah. So time
Okay.
is not on our
So,
side. Hmm.
so even though you're not holding, you can still try find opportunities in the
Yeah.
markets by trading.
Yeah. I trade and make money and go and come back after a week and then I and then nikisikia tu niko na hiyo time ya kutrade because again the goal is to reduce my trading activity. I leave it for the bots to work for me. So when I feel like
Okay.
I need to trade, maybe I want to be active in the market because it's good because you are still practicing. You don't forget the skill. So
Yeah, yeah.
yeah,
Okay.
okay. So
All right.
1 minute in Asia. So let's just continue in the next class and then we
Ah,
finish up. So let's finish up so that
okay.
naona tutakuwa na so much to cover, but those videos will help you, the ones I was telling you about earlier. Can you see my screen?
You can see your screen. This class is so interesting. I don't know that that tool is almost addictive.
Yeah, it's actually addictive and it's so easy once you understand. So let me show you the downtrend because you said that you need to see the downtrend. So I start with the fib tool. This is an impulse. Remember, this is a higher high. It broke, forming a lower high. So I take from a swing high to swing low. You see it retraced at the 23.60% of the fib, which is also called the 0.236 of the fib. Now, when I come there, I come and get the I come and get the fib, because this is the support level. So I look for the swing point, sorry, the candle that formed the swing point here. So I come and take my rectangle. I create my zone from wick to body and maybe extend it kidogo tu. Hii haipeanangi opportunities mingi. So someone would have just entered there once this rejection candle was formed, this red candle, angekuja tu achukue tu nini yake aeke stop loss haraka haraka and take profit, and then target this lows down here. There. So angepata 1:3 risk reward trading a sharp. Then there's someone else who doesn't want to wait that long for that, because remember 4 hours in a take almost half a day or even more. So somebody else will just come. Okay, chart imeenda wapi sasa? Huku chini. Someone else will now come and now entered on maybe the 5-minute time frame ama 15-minute time frame. So this time let's try the 15-minute time frame, because I told you that is what works best with the 4-hour time frame in the support and resistance class. So what I will do, so you see this is our zone right here. So price ingekuwa imeingililia hapo, ingekuwa close somewhere there. So our next opportunity would be this. So I just wait for price to come back and reject. Chances are you would have entered here. After this candle, this big, and then it has a big wick, would have entered there. Somebody would have entered here. Somebody like me, I would target the external of the zone and targeted this lows right here. I would have gotten a risk reward of 1:3. Let's see if it ended up, yes, there. Someone else would have entered again here. Someone else would have entered here, because remember it came down and then it rejected. Kuna mtu angeingililia hapa, still the same target, and then when it came back up, kuna somebody who would have come and traded again there. So you would have like 3 trades, that is 3%. Kuna mtu angerisk 3% in this one ka trade 3%. So ama we just stick with 1%, because it's also good to trade 1% only. Have 1%, ikienda sana 2% running at once. So hivyo ndo kuna traders wengine wangekuwa wanafanya, ama mwingine ange trade like seme kama mimi, if one trade targets here, I will take another trade, maybe even if we pick this one, my stop loss would be same level, and then my target would have been in this next swing low. So 1:4. So yeah, so 3 trades, maybe possibly 3 outcomes. That is the 15-minute time frame. Of course, when you go to the 5-minute time frame, you're gonna get more opportunities but smaller targets. Utakuwa na like 1:2, 1:2, 1:2, zitakuwa mingi. So still need 3 opportunities. No, there are more. So you would have entered here, maybe 4. So you see 15-minute time frame is still valid. It's still a valid area. And then the stop loss will be lower because you're gonna target now this level, for which this will be a tight stop loss and tight TP. So yeah, basically that. So use your 15 minutes, 4 hour venye tu nilikuonesha. Let's go back to the 4 hour time frame. I show you now another whereby you're just focusing on that level. And maybe I need to show you if you are trading maybe the lower time frame, because you can use it in the lower time frame as well. Okay, let's remove this one and then create a new swing low. So for example, this was a swing high, swing low, forming a lower low, lower high, lower low. So the new one will be here. You'll take your fib, left to right. You're looking for resistance. You're looking for resistance. Okay, so I was saying there's somebody who can just trade, um, who can trade in one time zone. So whatever I'm doing the four in the time frame, the one time frame, instead of going back and forth. So
Mm.
they can choose like, okay, let me go back to, I want this to enter. This is the swing high, swing low. I'm at the lower high and then the lower low has formed. Once a lower high and lower low has formed, you just come and grab your fib and draw your Fibonacci level, your Fibonacci retracement tool. So there's somebody who would wait. Maybe actually they would have started here because the first rejection would be right. Okay, this is the one that has formed. Their first trade will be right here. Let me start. This is the first place that somebody would trade. But then this one would be a stop. This one would be stopped out because price came and took out this person right there. Their target would be still down there, and then they will be stopped out. But they now this is a good way to show that Fibonacci is not bulletproof. Like it doesn't happen this way all the time, but it has a very high win rate, approximately 80% win rate. So this would have been stopped out. Now they would have waited for another fib level to be rejected, and then a confirmation candle to finish forming, and they would now have entered in this level that I've shown, that ended up being successful. So that's what I was telling you. Did I miss anything important? So the main thing that I was telling you, you can do this. Just focus on each on a level. So we kazi yako ni kwenda kuangalia Fibonacci retracement ya Bitcoin, gold, Euro USD, GBP, JPY, and just wait. So you can use that method, or you can also use, if you're focusing on one time frame, or two or three time frames, you just go back and forth. Now the advantage, this is better. I would prefer you use this method. I normally prefer using this method instead of the other one, because it may confuse you. That's why I was telling you, yes, even if you're looking for more trades, it's always better maybe to simplify, because they're doing the same thing. They're offering you support and resistance levels. So for that, you just pick, the 4 hour, especially for swing traders. This is for swing traders. Swing traders normally don't have maybe to have many trades in a week. So every 2 days I'll be having a trade. Every 2 days, one day maybe I'll be having a trade. So you can just focus on one. Fibonacci can be used on its own. If you have a Confluence, it would be better, but it's a good way. So I've shown you two methods. The one that I showed you in support and resistance, one time frame for support and resistance, lower time frame from entry, but this one you can just use for in one time frame. So I was encouraging you to use the 4-hour time frame because it offers strong Fibonacci retracement levels and it's good for market structure. Have I made sense,
Yeah.
Rehema? Okay, so okay, let me just finish with one more. So we had gotten the Fibonacci retracement for this one, we've gotten for this one, and then finally let me take another one, which is this one. Swing low, sorry, swing high, swing low, left to right. You see, it's still rejecting on a fib level, and this time it rejected on, it almost touched the 61.8. It rejected on the 50% time frame, and then rejection candle. This is that one, and then the entry would have been here. So unakuja tu unaweka fib yako, sorry, unaweka stop loss yako hapo, una target the next this one, unakuja na target hapo, and you have a very good risk reward ya 1:37. So yeah, so basically sorry, so basically hivyo ndo inatradiwa. I don't know if you have any more question, and then you come now. So ilikuja 1 2 3, so this is a sequence 1 2, tumepata Fibonacci ingine, tumepata Fibonacci ingine, and then we have one more, which is this one. So we come again and form our fib tool, left to right, left to right, and then you enter right there, stop loss. That's kawaida stop loss, and then take profit ingekuwa somewhere there. So hii inatupea a good risk reward. So ukiona hivi unajua okay, katrend ketu kanaenda kuisha, and then yeah, so okay, basically this one will be forcing issues, but it will have given us maybe somewhere close to 1:2. Yeah, so our trend is almost over in this instance. And you may be asking, why not choose this one? We can also use that one because in real time, this is the first one to give us an offer, but chances are we would be stopped out. Let me see. So yeah, it offered us that. Our stop loss would have been right there. Sijui kama risk reward, no risk reward yetu. Let's see, left. Because this would be our risk reward. Sorry, our take profit. It would have given us 1:1, so it is not a good idea. Umeona? So somebody anaweza ingia hapo apate 1:1 yake, 1:1.5, ama mwingine angoje. So the good thing about this is you see, si hatuta trade Fibonacci levels zote, utakuwa unangojea yenye inakupea a good risk reward, especially 1:2 and going upwards. For example, hii it's a valid knee but haingekuja all the way. Oh, sorry, hatunge qualify this one because our risk reward didn't make sense. So the other one would work. Now I needed to mention something. Our targets. Let me remove this Fibonacci tool. Sorry, let me remove this take profit. Let me use a Fibonacci tool. Rehema, can you hear me?
Nakusikia na nasikia kuna mwingine anakuita.
Anyway, so ako sawa kuna
Kanaendelea aje, kameamka?
kalikuwa kamelala. So this one, what we're gonna do is we need to know our stop loss. Normally, I like to give if my entry was in this level, my stop loss normally is in this level. Like you, Ruka one level, the next one. My take profit is normally the next swing point. For example, this is the next swing point right there. Umeona? It can be this one, it can be this one, but we've already taken that one, so the next one is this one. So swing points ndo zinakwanga za take profits, then the levels are 2 levels up ama down at the stop losses. The other option is now using the extensions. Extensions sasa zinakwanga mzuri, but hizo ni cumbersome, so I find them to be cumbersome, but ni mimi tu sijazoea kuzitumia, so I don't like using them. So this is my stop loss. So yeah, so I count two of them. Unaruka moja, the next one like that. So 1:2, and we have our trade. So yeah, so basically that's all about Fibonacci. I don't know if there's anything else to add. I
Do you
think
want to look at the gun one, the gun tool?
I don't use it, so I don't even teach it.
Okay.
I don't use it. So, but you can go and learn it more in your own free time. You can go and learn more. It's not commonly used. Not many people use them, but those who use, I'm sure you can find a good tutorial. So there's so much more in the notes. I'll leave the notes for you to go through. They offer, one thing about Fibonacci is they have high probability setups and they are very good. The thing I will encourage you to do is to have patience. So when you choose to use Fibonacci, just know you need patience because it is market structure. It is based on market structure. So you just try and use it with market structure. I don't know if there's anything else to add, but I'll give you homework. And go and try and select them. Sorry, go and try. First of all, because it is tied to market structure, go and understand, because it will help you understand market structure. Go and look for lower highs, lower low, lower high, lower low. Alafu una map. Which Fibonacci level did it work with, and then see if you can. Now it is up to you to know which strategy to follow. Are you gonna use it on its own? Because Fibonacci is a strategy on its own. I think I need to remind you that it's a strategy on its own. You don't need to add any other thing. Maybe you can just add support and resistance, but it's a strategy on its own. Like you can use it as support and resistance on its own. Maybe you can have confluence of. I need to mention this before this class ends because I see time is also not on our side. In the video that you're gonna see in my channel for this topic, you're gonna see I mentioned something called fair value gaps. Fair value gaps are called imbalances, the other word. So like this, let me remove this. So for example, we normally take 3 candles, 1, 2, 3. The space between these 2 candles, that's a fair value gap ama imbalance. It shows that something massive happened. Ama price had so much momentum, it needs to be rebalanced. And if you can notice, retracements normally operate, or rather, price normally retraces in those imbalances. Have I made sense? First of all,
Yeah, so by fair value, you mean like it's a confirmation that a
it's
retracement is coming?
no, it's gonna be a confluence. So what you're gonna do is the Fibonacci levels that are in an imbalance ama a fair value gap. Imbalance na fair value gap ni the same. It's a gap. It's an imbalance. There's no balance between buyers and sellers. So price needs to rebalance itself. Now, normally Fibonacci retracements work at those. They normally, most of them, the high probability ones normally work in those imbalances. Like you'll see them appear in those imbalances. For example, here there was this is a fib level and this is an imbalance. If you go back here, this is a fib level, this is an imbalance, this one. So from this to this is an imbalance. Inatumikanga sana sana na watu wa smart money concepts, but also as we normally use in price action also involves imbalances. So side ya smart money inaitangwa fair value gap. Side ya price action, it's called just an imbalance. So you can see this is an imbalance, this is an imbalance. If you go through looking, you will notice that. So you kazi yako, one of the confluences ni it needs to, the first confluence, let me just say that. Let me just summarize for you. For example, you are using this time frame. Sorry, price was in this time point in time. So what I would have done is I would look for this lower low to be broken. It ended up breaking right there. So now this is a new lower low. Because you're using market structure, lower low has to be broken. Next thing I want to see I want to trade a Fibonacci retracement. Ama I want to trade a pullback. Ama I want to trade a correction. So you see an impulse and then this is a correction. So I'm trading this correction. So forming a new impulse. Remember in the last class I told you it's better to trade this way than this way because you never know how, like you don't have a clear goal for this trade because haujui itafika hadi wapi. So it's better to react after it has rejected that Fibonacci level. So that is the second thing, the second step. The third step is that retracement happening in a fair value gap? Yes. So that makes it an important level, an important thing, which is an added advantage, which is a confluence. So there's somebody else now who will come and look at support and resistance, like there. This is a support level. This is so this is the imbalance is one confluence. This support is another confluence because it shows an SR flip. I hope I'm not confusing you. Let me color it bold.
Sawa. Mhm.
So this
Mhm.
color is now another confluence. So we have the imbalance and the support, which is now resistance. You see now it's forming a very strong, confirmation. It's giving us even more confidence, inatupea like more confidence. We are more confident.
Sorry, so the third one was the SR flip. First one was the imbalance,
Yeah,
second
the
is the
first one was
support.
and then now the support plus this support now becomes an SR flip. It ceases to be a support, now it's a resistance. Why is it not me? So support, unasema tu support slash resistance slash flip because it can be either, of which it's normally the flip. So support and resistance flip. So you see we
So,
have
so your
strong. Mhm.
sorry, so your confirmation that it becomes a resistance is after that imbalance has closed off, and the next candle is opening below it.
No, 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 no.
At that imbalance candle.
No, you're not getting. So okay, let me remove again. So initially this is a support level, no?
Yes.
And then price. First thing is market structure. Market structure has to break. So this support
Yeah.
level was broken and then we formed a new lower low. Sindio? Now it
Yeah.
shows market structure is in play. Now our goal is to take our Fibonacci level left to right. But we don't know where it's gonna reject. But we have a clue. Price has to come to our support, the previous
Support.
support,
Yes.
which is now
Uh-huh.
resistance. Now right now in this point in time it's gonna be a resistance because it has flipped, it has been taken out. So
Mhm.
our first confirmation is that it is now a resistance. So support slash resistance slash flip because it's a flip, but it was support, but now it's resistance. So it's a support and resistance flip. The second confirmation is the second confluence, ama important thing is it's in an imbalance. This is an imbalance. So we have two very strong things that are gonna add to our trade. And then finally now our strategy, which is Fibonacci, it's rejecting at a Fibonacci level, which in this case is the 50%. It didn't reach to 61.80%. It's rejected at 50%. Now, that is the third thing. So we have like three things that are confirming our entry. Finally, I need a rejection candle, because remember me, I only enter trades once I see the opposite candle forming. Like if price was going up, I need to see a red candle has closed. So my entry would have been here. I come, I take my stop, my risk reward tool. Oh, time is not on our side. My risk reward tool, I come, place my stop loss, which I told you is 2. I count 2, nini, 2, 2 levels, Fibonacci levels up or down. In this case, it's gonna be there. And then inafaa kuwa hapo kwa 61.8%. And then my target should be, I look left, I look back, and remember. So inamaanisha to remember. So we had taken this level. It can also be here, but I want to target this low here, right there. So I come and take this low right there. And my trade was successful. I close it like that. So yeah, so you go doing that for every. So my homework will be actually for you. Go and identify 5 fib levels and entries, and 5 fib levels for, sorry, 5 fib levels and entries and confirmation and blah 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 for an uptrend, and 5 for a downtrend. Consolidation, Fibonacci doesn't work well with consolidation. It's a trending tool, as a trending strategy. I need you to note this. For Confluence, you can have just one Confluence. Uli understand Confluence ni nini? Confluence ni 2 or 3, 1, 2, 3 things coming together, aligning. It's like alignment ama confirmation ama vitu zinaingiana, like intertwined. How can I put it? Like Confluence ni things are making sense, like zina 2 to 3 things, 1, 2, 3 things are making sense to make that place valuable. Nugget. So for example, for example, good. So I need to be brief. I don't know if I can be brief. One downside of me is I'm never brief, even if I
We
say
like that. We like that, right?
eh, but we understand
That's
the point.
passion.
So for example, this confluence, the most important confluence is it has to be in an imbalance. Then another advantage is there is support and resistance flip. Unless, as of course, now the normal confirmation is the rejection candle, and then you enter. Now I have seen one, the previous trade right there. So this trade, let me remove this. This trade, if you can see very, very well, we had our support. Sorry, we had our previous support right there. It was taken, right? It was taken, si ndio? Ikaacha kukua support, sasa imekuwa resistance, si ndio? So what I'm supposed to do, because this level, some levels you can delete, some levels you can leave, you just look back. Because this shows ili rejectiwa 1 time, 2 time, 3 time hapa kidogo, then hivyo. So this is a very strong level, and then it became a flip. So what you do is, right now I'm in this point in time, because this formed a lower high, then lower low. So I want to look for trades in this zone from here to here. You see, we had so many rejecting candles right here. So one way for me to disqualify, to make sure I'm trading the right place, I need to see price coming to this level and rejecting, and then I get my entry. So what I'll do is I will come, take my fib level from left to right, like that, and then I look where is this price has to come to this level, which it was attempting right here, but it finally came right here. And this is good because we have the 50% hii line na hii line zinakaribiana sana, which is, it gives me confidence. Why inanipea tu confidence, inafaa kupea tu confidence that you're doing the right thing. And then finally, if I just remove this fib kidogo, you see there is an imbalance right here. This from here to here, there is an imbalance. And then I just come and enter my trade. So I have like 2 extra confluences to give me confidence that I'm doing the right thing, and then I just enter once this candle closes without hesitation, without wasting time. Mama, I can put a limit order. I just come, put my stop loss there, because remember I have to count 1 to this second one when I cast stop loss, and then I come and target this lows right here. So this one right there. I have a good risk reward of 1:5, which is good. Which is good. So you see, that's how we trade.
Mm.
And you keep going, you keep doing that, doing that, doing that. So I don't know if you have any more question. You have 5 minutes, 4 minutes. So yeah, so mean me pair to homework end out after five uptrend, 5 downtrend. It can be in any pair that you wish. Hiyo nitakuuliza in the next class. Before the next class, we start the next class, I will ask you that. I will ask you, because it's important for me to know you understand. The good thing now, I must repeat, Fibonacci can use it on its own. It's a whole strategy on its own. You don't need to go back and forth, back and forth, back and forth.
Okay.
Yeah.
But it was important that you understand the other items,
Yes.
which I appreciate.
Yes. Because even in the next class we're gonna cover, we're gonna go to indicators.
Mm.
Indicators, there's the main indicator, and then there's confluence. When I say confluence, I'm telling you there are other strategies. For example, in candlestick formations, use an engulfing candle, use a doji, you see that's not confluence, it's not the main strategy. So and now support and resistance, the way I had shown you, support and resistance on its own, you can use it, ama you can use the nini mm, trend. You can go from higher time frame going lower, sindio? So nimesahau hiyo jina, but yeah, you get the point. So all these strategies are good. So the beauty about Fibonacci retracement, first of all, I told you in the previous class, it's similar, it's the same thing as market structure, because you're trading market structure. So Fibonacci is actively trading market structure. Okay, so there is the independent support and resistance, and then there's market structure. Now with Fibonacci, we are trading market structure. So Fibonacci levels are support and resistance levels. So we are going with market structure, market structure, market structure. We wait for break. So for example, here, when price broke here, you would be like, okay, right here, time is not on our side, okay. So you see, price broke, but then when you came here, it wasn't a strong thing. It attempt, but then it failed. Now once it fails, you are like, okay, the downtrend is still in continuation. Now you come and take your fib from high to low, swing high to swing low. So unaona fractals sasa hapa zinakuja kuplay an important role. Hapa kuko na an imbalance, hata kama ni kadogo, from here to here, and then you have this rejection candle, and then this and then you come and get, so the only confluence is the imbalance, and then you come and put your like that. Time is not on our side. Any more questions? So my stop loss will be there, and then my take profit will be targeting this one. A good risk reward, and you have a successful trade. Any final question?
I'm just looking at some of the notes I took at the start of the class when you were saying we were going to look at some things. Remember when you said we are going to look at the difference between leading and lagging indicators? Those are the ones we'll look at next time, eh?
Next class is now. We're gonna use
Okay.
indicators. So actually, you've done a good thing to transition us to the next class, which is indicators. We're gonna learn about VWAP. We're gonna learn about RSI, moving averages, which else? Fractals, and so many more. So leading
Okay.
indicators, lagging indicators, oscillators, we're gonna see them in the next class. I hope you
Mine
agree.
is just a final comment. Not tell you, Meisha. I like that we are going over all this because even for me and future students, now it's like going to a shop. You have many brands, and then now you pick what works for you.
Good, good, good. Perfect. Okay, see you in the
Mhm.
next class, which is next Thursday. This Thursday nakuja.
Yeah.
So I hope I was
All right.
helpful.
You are very helpful. I was looking forward to this class.